Good afternoon. This is Tony Cherniawski, manager of the Practical Investor LLC. Today is June the 28th, 2009, and we're going to take a look at some market patterns here with the title, It's Just Time. This video is meant for instruction and entertainment purposes only. This is not a solicitation to buy or sell any security. A purchase or sale of a security may result in a loss of principal. Please consult with an expert advisor who may explain the risks of any investment you may consider. You cannot invest directly in an index. Hello again. What I'd like to do is just cover a few points here of what's been happening in the last week. Remember last week I warned that the Standard & Poor's had broken a trend line, and that meant that there was some potential trouble ahead. And now I just want to give you an update of what's been happening. This week doesn't look particularly bad, but please remember we went through a cycle low here on Tuesday and Wednesday, and we have a little bit of a rebound. So let's just see exactly what's going on. The first thing that we want to look at is the Standard & Poor's index. Normally this pattern spells more upside because we have an ABC pattern to the downside from the top. However, the break in the trend here, the wedge formation that I've got outlined, tells us something else might be going on. So in blue, I've got this as an A wave down with a B wave rebounding somewhere up to the or just below the trend line. Let's save that thought for a minute and let's move on to the next thing, which is the Dow Industrials. Now this has a slightly different pattern, and I want to make sure that people are clear on this. If you know Elliott wave, this is going to stand right out at you. This pattern suggests more downside. We have a 5-wave move down ending on Thursday, and Thursday morning that is, and then a brief rally up. I believe that that rally may go back up to the trend line, which is right now at about 8,600. Believe it or not, my pattern calculations say that it may go to 8630 or 8640, something in that range, and be done. So we have a pattern here that says that we now have, we may now be poised, once we get through this pattern, for the downside. The pattern isn't complete yet, so we've got another day or two before this thing rolls over. Well, what I'd like to say is this. Why is it that people are suggesting that there's more upside? Well, there's a lot of reasons. The volatility indexes are coming down again. There's a lot of other things that say that the market is being very bullish and therefore should follow through with even a bigger pattern sometime to the upside. But let me just offer a counter suggestion here that says that maybe all of this is a little bit misleading. And the thing that I'd like to point out is the Standard & Poor's only has a 3-wave move down, while the Dow has 5 waves down. Now, on the face of it, that's a conflict because usually the Standard & Poor's and the Dow pretty much work hand in hand. They have a lockstep formation as they march forward, up or down. Now, the point that I want to make is this. I've got a report here that suggests that program trading this last week has increased overall by about 50% in some cases, and even more in others. And let me just take 2 examples. Goldman Sachs reports in the prior week that they traded 631 million shares. Last week they traded 977.8 million shares. This is directly attributed to the NYSE market analytics that gets released every week. So that's a 50% increase in program trading. The next largest program trader was Credit Suisse. That went from 245 million shares traded in the prior week to 586 million shares traded last week. That's a 100% increase in overall program trades. Let's talk about the bigger picture. Overall program trading went from 30.7% of the total trades made on the NYSE in the prior week all the way up to 40.4% of all the shares traded last week. Therefore, we have a huge increase. Depending on how you measure it, overall, we're talking about a 25% increase statistically, and in some firms anywhere from a 50% to 100% increase. Now, what's principally traded in program trades? Well, the principal ETFs that are traded are the SPY and the IWM. So we have a situation at hand that suggests that if these program trades increased dramatically last week, especially in the SPY, we have a little bit of manipulation going on, wouldn't you think? So let's just keep that in mind as we're going along. June 30th is Tuesday. That's the end of the quarter. We have a classic case, in my opinion, of window dressing going on. It's not just the mutual fund managers that are doing it. Goldman Sachs is scheduled to have one of the largest bonuses to its executives in its history for this quarter. So this is something that I think that they might be protecting here for the next couple of days. And let's just see what happens. What I'm suggesting is we've got another day or two of positive markets, but once the quarter is over, and maybe even before, we may see a little bit of relaxation in those program trades, and let's see what happens after that. So without any further ado, I want to thank you for spending the time with me today, and by all means, I hope you do the right thing. And if you're interested in the weekly, or rather the daily newsletter that comes out, we have an offering going on right now that I think would be pretty hard to beat. So you may contact me at tonyc@thepracticalinvestor.com, or you can look at my website, www.thepracticalinvestor.com, and take a look at the offerings on the left-hand side under the company. And so with that, I would again like to thank you for spending the time, and let's see what happens this week, and I'll report to you in the very near future. Thank you.